Today we will discuss a very important topic, which is the reversal of the altcoin markets, or if they are going to be happening, because there are massive signs. But the question is, are those signs actually going to provide us the market that we wish for? Let's get started. During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin. Let's talk about some very important data today. It has been the FOMC week and it has been the week of the Bank of Japan. So there are some interesting takeaways that we can take from those events going forward into the next month. And I think, first of all, the Bank of Japan not doing a rate hike is technically something positive for risk-on assets, because in the previous two times when we had a rate hike, the markets collapsed. If we recall August of 2024 and also a month ago, we had a pretty severe correction taking place on the markets. Side note, we are likely going to have another rate hike from them happening in June, July. So that's something that if you're an investor, you need to take into account, that if they are going to do that, perhaps taking some off the table, depending on where the market is, might be a good strategy. Now, the FOMC took place on Wednesday, not really that special, but there are some interesting takeaways, which is that inflation, what they say, remains to be elevated, while we know that CPI and PPI are actually coming down. And they start saying if the labor market weakens, the Fed can ease if needed. If the economy remains strong, policy restraint can be maintained. So next week, or actually somewhere in the next few weeks, we're going to see the GDP data coming in for the first quarter. We are at the end of March, so likely in the next 2 weeks we're going to get that. And it's very likely that GDP is going to be worse than expectations, given that we have the tariffs that also always have a short-term impact. So ultimately, I think that that is an ingredient. We also saw that the labor market data was really bad in this week, considering that the expectations were higher. So they are waiting, but the markets are already starting to price in that they will do rate cuts, as we see that the yields have been coming down. And also the dollar has been making a severe move. Now, if we look at the current sentiment, then a tweet from Kevin Gordon is providing us a chart, which is the expected change in business conditions in a year. So it's basically forward-looking consumers, or what their expectations are in the coming year. And it's the most bearish for the last 55 years. So we are not at the actual down bear market or whatever we are, but it's just showing that right now we are peak bearish on everything. Peak bearish on equities, while S&P is just down 10%. Peak bearish on crypto, while they are at a cycle low. Peak bearish on Bitcoin, while Bitcoin is just consolidating at $85,000. So that is actually being strengthened by a chart that Zero Hedge provided, which is that we currently have the highest amount of puts ever, and puts are technically shorts. So the markets are, or the participants are expecting the markets to collapse, or are betting on a downwards move to occur. Usually the opposite will happen. And you can see that in the chart, in the past 2 years, there have been 2 spikes taking place. The first spike was during the correction that we had in 2022, when the dollar started to go vertical, and the markets were into a kangaroo mode. And the second one, the spike there, is on the bottom of the first collapse that I just discussed with the Bank of Japan doing the first rate hike. There was also a period where the puts were accelerating quite fast. And right now we are having more puts than that actual moment, while we are down 10%. So that in itself is an interesting metric to look at. And I think that the old saying of do the opposite of what the mass is doing is probably going to be the best play if you look 3 months ahead, 6 months ahead, and 12 months ahead. And if you do that and you look at the data, and I've been coming back to this multiple times, but this chart from Julien Bittel is providing us the variation of, or the standard deviation of the dollar, which has been going extremely negative. We have seen a massive move on the dollar, which has only happened 3 times in the past 10 years, or actually 12 years. And in all of these times, the markets on Bitcoin have bottomed out. And after that, we yielded ourselves into a massive return. If you look at the 2015 cycle, we went from a few $100 to 20 grand. In 2020, we went from like 6K to 69K. And in the 2022 cycle, we went from 15K to close to 100K. So at this point, it's very likely that the bull cycle is not over. We are on the start of the actual bull cycle, and there is still a lot of upside that is actually going to provide a great return if you stick into the markets. Let's look at the portfolio. As you know, I'm sharing my portfolio. And again, it's an hypothetical portfolio because the actual valuation is where I've been buying these coins. And the positions in terms of percentages is also what I'm having. But of course, I'm not sharing my actual portfolio. But with this, we can actually turn it into a trading activity that we can do on a weekly basis. So I just updated the current prices. And as you can see, we are having an investment of 110K. And the current valuation of our portfolio is $48,000, which is down more than 50%. That is not great. That is actually terrible. And I know I've been having that in the previous cycle as well, where I've been down way more than this. And I'm still relaxed because my horizon is long enough that I know that at the end of the day, I'll be making more Bitcoin with it. There are 2 strategies, the rebalancing on a monthly basis, and there is to take profits on levels that I've discussed in the previous updates. If we look at the portfolio right now, then the balances are fine. So the bigger positions are between $7,000 to $8,000. The smaller positions are between, well, let's say 2.8 to 4K. We could be balancing it out a little bit, but it's actually just fine. Now, if we look at the markets and see where we're going from here, then the first thing that I wanted to do is to look at the current valuation of Bitcoin versus the actual valuation, which is compared to gold. And you can see that we're still way down from the previous all-time high in 2021. And I think, as I've been saying in the previous updates, that we probably wouldn't have seen a new all-time high if we didn't have the ETF. So I think that the actual cycle still needs to start, and we are on the edge of it. But that means that it takes a little bit of time to accumulate and to find an actual bottom. And in this case, the valuation, as I said, of Bitcoin in gold, the real valuation, because gold is an inflationary corrected asset, is still down from the all-time high. If we're looking at the dollar, we can see that we had a massive move here from 107 points to now 104 points. But the key trigger on these charts is that it's actually starting to turn around, which means we have a downtrend occurring here. And it's very likely that we're going to continue lasting that downtrend in which we flip over, and having such a weak dollar is going to yield into upwards momentum into anything else, including altcoins, because altcoins will strive when the yields are going to fall and when the dollar is going to be weak. And in this case, we can also see that we're basically consolidating on the yields and have been taking liquidity. It's a very technical chart, but we have been taking the liquidity here, so it's very likely that we're going to return to the other side of the range. And the lower that it gets, the 2-year yields are going even lower at this point. The lower it gets, the better it is for risk-on assets, and the better it will be for Ethereum and Bitcoin. If you're looking at Bitcoin, it's a tricky range-bound construction, which means that at this point, given the bearish sentiment, I think it's still in an accumulation period. But if we lose this 82 level here and start to fall and tumble down, I think we will have one more sweep. So that's where the liquidity is on the downside. If that happens, I think the best strategy to go for is to buy the dip. If we do not have that and go back into the highs, we start to have an upwards move here that is likely going to get us towards 90k, and 90k is for me the crucial level before we have a new all-time high. So anything in between is not special. And if you're an investor, the only thing you need to do is to basically buy the dips when Bitcoin drops between 20 to 30%. Great period to start accumulating. Now, the most painful chart is Ether against Bitcoin here. Technically, we could say that we're creating a bullish divergence on the 3-day chart here. So in the upcoming months, I assume that we're going to have a reversal going upwards. But by all means, it is not valid yet at all. We need to see way more strength. We saw some strength coming in during the week, but we need to see Ether against Bitcoin clearly break through resistance points. So we can see that we went all the way back towards this support, rejected there. So I want to see Ethereum against Bitcoin break through the area of 0.0245. If that happens, yay, my portfolio is going to go up. And when we look at my portfolio, you can see that basically all the coins are just following suit with Ethereum at this point, where Optimism is likely going to do the exact same as what Bitcoin is doing at this point, probably going to test the lows again, find a double bottom, and reverse back upwards from here. And the same can be said about Wormhole against Bitcoin. There's some good information about this actual asset, but it's currently still correcting down, and even though it keeps on falling, the weekly divergence is still valid, and in the next few weeks we need to see a strong weekly candle, and then it starts to be approved. So that's currently how the markets look. We might have another correction on Bitcoin, and to me that is just an ultimate opportunity to accumulate even more for my portfolio. And that's it. The game plan hasn't changed. It is a new reality where slowly but surely people start to understand that the 4-year cycle is gone, and it's all depending on liquidity and macroeconomics, and institutions come in which create a different environment. So we are currently in the most difficult part, which is that you need to be patient and that you need to understand that time is going to pass and confidence needs to be built up. Which means that I'm not going to sell my positions. You might say whatever you want, but I would advise you not to do it either. And of course, not selling your positions, there's a lot of risks involved into investing into crypto, so make sure that you do not invest any assets or money that you can't afford to lose. Anyway, everybody is extremely bearish at this point on the markets, and all I know from my experience is that if everyone has a certain sentiment, my tendency is to do the exact opposite, and that has yielded me a good return over the years. And I think that's the core essence of this update and going into the next few weeks. So we are here to provide the information that I have with my experience, with my decisions. I hope you have been enjoying this update. I'll be back next week. Ciao.